But like I said, 2 weeks. It's just way too long on a vacation, just relaxing like that. Like I get antsy. I need to work.
Yeah, it feels weird.
It does. Yeah, it's just like it's. I mean, I'm sure for most people they don't mind doing that, but
Yeah.
like for people like us, it's like, oh man, I need to get back. And then plus like I said, two
The
weeks.
way
This whole first half of my year has gone between the bachelor party, wedding, honeymoon, going down to Florida to look for places, then Cyprus for 2 weeks. It's just way too much distraction for my liking.
Yeah,
So it's so good to be back and have the second half of this year just distraction free and able to just like just dig in again and get back to myself.
absolutely. It,
How are you guys doing?
it's the same way for me. If I'm away, like even if it's like more than 2 days, I would say, then you start to get a little bit more like I need to be doing something. Like I
Anything more than five for me.
real five, my mind's like very short then. Mine's
Yeah,
like 2 days.
you two are robots. That's why you know.
We're what?
You're both robots. I swear. Your commitment and time management, both of you guys, is something else, man. Honestly,
Appreciate it, man.
I,
Appreciate it. Yeah,
I
it's just
when I hear 2 weeks off, that's like, oh, I need that. You
Yeah.
guys are like, no, no.
it's. I mean, but we're like so used to like a 5 day, 4 or 5 day little getaway, like me and Meg.
Yeah,
So when it's 2 weeks and you go 7 days of like a whole vacation, it's like we're so used to coming back and getting back in the rhythm and all that stuff, and then it's like we got a whole nother week to do all this, and it's just, and then plus I misjudged the time zone in Cyprus, right? I'm thinking like I was gonna be able to wake up 6 7 a.m. and
6 hours
trade
for you,
London a
right?
little bit. What was that?
It would have been a 6 hour difference for you, right?
Yes, but like London Open is at 10 a.m. And on a vacation, 10 a.m., like you're really getting started with your day, either going to sightsee or, you're going to the beach. There's not much reception at the beach. It was
Yeah,
just like very frustrating to be able to send analysis and all that stuff when I got a family and all this stuff I got to do.
Mhm.
So,
hmm
but anyway, too much negative I'm talking about. It was amazing. The island is amazing as well. I highly recommend a lot of you guys going there. KB, there's a lot of Brits down there that go down
I
there.
know, I know, I know.
Yeah, they love it.
Cyprus is nice. Cyprus and Greece both. It's like a European getaway for
Yeah,
everyone.
yeah. It used to be a British colony. Like that.
hmm
That island's been tossed around so many times throughout history. If you watch it's a nice little 10 minute like history video on Cyprus, and they
Yeah.
just go through the history dating back all the way to BC. We were actually at the Tomb of the Kings, where you see these ancient Greek columns that are like either on the ground, like broken down, or still standing. And it's like it used to be controlled by Egypt as well. So the tombs are pretty much set up like Egyptian tombs.
Crazy.
Yeah, it's nuts.
A lot of
How you
history.
guys doing? Enough about me.
I'm
Good,
doing
good.
great. Yeah,
Yeah.
didn't really take a lot of trades, but yesterday was quite fun because I traded the market sentiment for the interest rates as we were trying to like push down a little bit, quick scalp,
Hmm.
and then closed that out just a couple of minutes before the news came out because I started seeing price kind of wick around. And then we were talking about it in the group too that we were expecting price, specifically for gold, I think is what we were talking about, but same thing for US 30, where we were expecting price to create like some massive wicks and then continue in the opposite direction.
Mm.
So then after that, then I traded that, the entire buy up on US 30 as well. And then right now I just entered like a sell, another sell, again, just leading to the market sentiment for this GDP.
And US 30.
Yeah.
Nice. Nice. We're getting a little fake out on GJ as well right now. Nice clean move to the left.
Yeah. Oh, you want to go ahead and go over the charts real quick?
Yeah, absolutely. You wanna just go. I mean, I'm sure everyone already knows we're already expecting GDP quarter
Yeah.
to quarter right now. So and then
Let's
unemployment claims, of course.
Yeah, so let's go over the technical side. We'll just switch it up this time because for fundamentals, it's just going to be a quick little summary.
Sure.
But let's go over the technical analysis and then we'll move, and I'll give you guys a quick summary on the fundamentals.
All right. Well, it is good to be back with you guys, breaking down charts. I'm just gonna start with the monthly. And as you guys know, I like to keep the monthly levels, like the historical levels, pretty much marked off over here. So looking at GJ right now, I'll try to get through this quick because there is a trade presenting itself. Again, looking at 158, 156, we got that clean close above 158 and 156 after the liquidity grab from the invasion of Ukraine. This candle closed a very strong bullish candle with a wick to fill, ended up filling that wick and closing a strong bullish candle as well right here. Next candle came all the way back down to 156, retested it, snapped all the way back and closed like a weak bearish candle. I love this setup here, whether it's the 30-minute, like if I'm scalping, I love taking this where you create that higher low top or bottom wick. We pass the high of the previous candle right here, and then we shoot right back up, creating these yearly highs around 168, I would say 500, 600, or even 700 right around here. Next candle right here, the current monthly candle, as you guys know, July is almost over. You have this higher low being formed, this candle respecting the lows of the previous candle. We're right now snapping back, just like we did with this candle right here. We're now about to close like a weak bearish candle, respecting this area right here. So could the next candle create a bottom wick, possibly respect the low of the previous with a weak Japanese yen, and price just continues right up to the yearly highs and pushes right through 168. So that's a strong possibility that could happen. Looking at the weekly now. Weekly, as you guys can see, we've been pretty much ranging here. Long wicks, small bodies, price respecting this support right around 162. We keep rejecting this level. You guys take a look right here. You keep rejecting this support right here with all these candle closes right above that level. We keep rejecting it. Then you ended up getting this candle close. And as you guys know, in a bullish trend, what I like these candles, when you leave that top wick, right? Candle flips bearish and closes bearish like this. If you're in a bullish trend, a lot of times we end up filling that wick. So it looks like we filled that wick right here. And now we're starting to retrace with a strong, we got a little pullback on the Japanese yen after the news yesterday. So right now you see this retracement. Are we going to flip bearish over here on the weekly? Where are we going to end up? Looking at the daily now we can start marking off some levels. We have the previous resistance, support. We keep rejecting this level over here, holding a strong support, right? Been in this little bullish trend. If you guys mark this up right here. Actually, I believe we can extend that over here a little bit. Yeah, you can extend that over there if you'd like. But the main thing is we've been creating, since reaching these all-time yearly highs over here, we've been making these lower highs, right? So now we're currently respecting 166, which is the more important level that you want to pay attention to, the support and resistance. We keep respecting that level and keep rejecting it. But here are your lower highs over here being respected. So right now, the current daily candle, after getting that bullish candle, we got that retest of this area. We're now getting a strong bearish push continuing down. But nonetheless, inside of this area is all a big range, right? We're getting higher lows being formed, lower highs, respecting the resistance, not pushing through this 166 level. We keep rejecting it. So everything is kind of a big range over here. But that doesn't mean we can't take trades on the lower time frames. Looking at the 4 hour, you just got to be safer, right? You got to be on top of your game and looking for your specific setups that you like. Now, looking at the 4 hour, I love this setup right here. I'm sure you guys know. Even though we're kind of ranging here, we have a clean move to the left. We got these consecutive bearish candles closing. We got a weak bullish candle retesting this area. Previous support turned resistance. Only thing is, I like when we have a top wick on this candle right here. We ended up passing the low of that candle. We're continuing right back down to our next support right over here, or more recent support. We have a level right over here I want to mark off on the lower time frames, possibly around 164, 500. But we'll see what that looks like on the lower time frames. Again, I'm trying to go through this quick so that we can take this potential trade here. Looking at the 1 hour now, since tapping into 166, you're getting these lower highs being formed and lower lows, right? We ended up breaking this previous support. Gonna adjust that a little bit. Previous resistance turned support. We kind of like faked it out over here. and now you ended up getting a strong bearish candle close right here after some weaker bullish candle closes. You got an engulfing candle right here. This one didn't create the top wick, but it passed the low of the previous candle and just shot down. I believe that was early this morning. So we created this low. We're coming up. We retest 164,500 right here, holding that resistance. You could drag that over to the left as well. And now you have a strong 1 hour candle right over here pushing right back down. You can adjust that right back down to 166,700 right in this support area. Looking at the 30-minute now. I'm just going to adjust this just a little bit. You ended up having a little resistance right over here. Price held support right in this area. As you can see, the support to the left as well. We ended up holding that resistance right there, but also respecting this support. So we pushed up through 164,400, right? Kind of created like a fake out here. And now we're about to get a nice 30-minute close, possibly strong close, to continue this bearish push. Again, we're going to adjust that support right here, and I think we're going to be able to get a nice move. As long as we close below this area, maybe a top wick formed on the next one, passing the low of the previous, you get a nice tighter stop loss, as opposed to maybe taking it right now, where you put your stop loss all the way up there, and plus this candle didn't even close below yet. Right? So what I would anticipate is just that top wick on the next candle, passing the low of the previous. How many pips do you have in this area? About 60 to 65 right here that you could possibly take and take this thing down. Based on the 30 minutes, so it's a strong confirmation, and might be a nice trade for you today.
I would also, if I could add that on the 30-minute candle, this candle broke the high and the low. That
Yes.
tells you that there's uncertainty, right? That there was a lot of volatility. What I would suggest is just wait for some candle closes here. So if you drop down to the 15 real quick, Stefanos, because now we're 13 minutes before news comes out.
Yep.
So what we want to see here is kind of see the momentum first. The way that you kind of analyze whether that's momentum or not is you want to see the candle breaking the low of this previous candle here. So basically what you want to see happening here, if I were to actually draw this out, is price has already made its bottom wick. So you want to see price kind of fluctuating down here. So like as it comes down, so for example breaks the low, and then you'll see it, just imagine that these are just different sequences of the same candle, but kind of fluctuates back up here, and then it continues pushing from down from there. So basically what you want to see is the price continue to break its own low as it's trying to test right now. And that's how you're going to test the volume and the momentum. That's the impulse entry that is valid, but if price is not able to break the previous low down here or its own low and kind of test these areas, then there's really no trade opportunity. Just wait until the news comes out and then trade the reaction to the news.
Exactly. Yeah, this is kind of the setup I would like to see on the 30-minute as well. One thing that you pointed out, this indecision candle, right, on the 30-minute and the 15-minute, I 100% agree with you because, a lot of times it really doesn't play out. But what I have been noticing on GJ is that price has been dropping after getting these little indecision liquidity grabs. Have you noticed that?
Absolutely.
Like I was able to take one on Monday or Tuesday of this week. I think we grabbed like 3 trades that day.
Yeah.
And it, we created that top wick and price just dropped anyway.
Yep.
And I've been noticing that. Yeah, you got that right there. You got it right here, right?
Yep.
So just understanding these patterns right here. So, nothing could be different right here. You could have history repeating itself and price just dropping here. And you got a fairly nice move coming down into this area. But with the New York volume, we should push through that right back down at 163,600.
And it's also because, regardless of whether they want to change the definition of a recession or not, and we can have that discussion later, when you look at it, really what's the true definition of a recession and how do you kind of measure it? So if
2 quarters.
Yeah, exactly, 2 consecutive quarters coming out with negative GDP. So if we see that, even if it's just advanced GDP, but even if we see that as a negative, the market's already getting ready for it. Right?
Yep.
And we're already seeing from a technical analysis perspective exactly how the market is getting ready for it. We're getting ready for some sell-offs on equities here.
Yep. Take a look at the Japanese yen over here. Since the dollar fell yesterday, you're getting this pullback on the Japanese yen. It's daily, but take a look at that. Nice support formed, right? Another higher low formed on the Japanese yen, price pushing up. That's further confirmations that you're going to get sells on GJ, on EJ, any kind of yen pair,
Hmm.
right? Actually, if you go over to I kind of take this like a grain of salt, or with a grain of salt. Where is it? The Anybody follow the market milk um, currency indicator on baby pips?
I do
You
not.
got you got many of these currency indicators, many different websites that you have over here. It just adds another little confirmation for you, just understanding what pair or what. It also shows pairs as well, but what currency is the strongest for the day and which is the weakest for the day.
Hmm.
Also, looking at your indices for the day as well. That's going to help you add more confirmation behind your trade, or even save you from taking a trade. Gold setup right now is beautiful. Okay, so let's go over gold real quick. We got news coming out. As you guys know, again, I have my historical levels marked off. I have 1575 over here, the support down here. More importantly, 1680. You have 1750, previous support over here. You have 1830 over here, 1900, 2000, and then 2075 are all-time highs. 1680 is what I want you guys to pay attention to. Very strong demand and support area right here that price is bouncing off of. We've bounced off many times over here, right? Very good GDP over here as price pushed all the way down to that, not GDP, but NFP pushed all the way down into that area and then bounced back. Right now, you're getting another bounce off that area, not to mention right over here as well, right? So every time we bounce into that area, then you get some of the fundamentals or sentiment fundamentals of Powell coming out kind of dovish yesterday, saying that he wants to take it by meeting by meeting basis, not giving too much clarity to his policy changes or anything like that. So we'll see if he's going to raise interest rates by 75 basis points again and really combat inflation, or if he's going to kind of stay still and wait to see data like today. All right, so
Yeah.
right now we got a nice bounce off 1680 with a strong weekly candle. Bottom wick formed, higher low formed, passing the high of the previous candle. Current candle is bullish as well. So what are we doing? But the thing is, we're bouncing off 1750 over here as well, right? So could we bounce off of that and continue down? Right now, what you're getting from the all-time highs of 2075, we've been in this bearish trend, creating healthy lower highs and lower lows, right? So could we be getting a pullback, sort of like we got right over here, right here, where we either consolidate. Damn, nice move on gold right now. Where we either consolidate and tap into this area right over here and then continue down, or we possibly push up further, or we just reject this area and continue down from here. Looking at the daily now, you have this current consolidation or kind of range over here. We were creating these lower highs, and now price is kind of breaking through that with the data that came out yesterday, or the meeting and the interest rates that came out yesterday. We ended up pushing back up to that 1750 area, right? And now we're starting to reject it a little bit, right? Getting ready for the data coming out today. So now looking at the 4 hour, 4 hour is getting a nice rejection off that previous resistance right now. You have a support and previous resistance over here to the left, right here, that we were just holding, right? But are we going to break through that area? Are we going to continue down from here and possibly mirror this candle here, mirror some of these candles in that area? You have a support right down around like 1710, 1713 right here, right? That price could be coming back down to. Or again, for buy side, you just need a nice clean close above this area. You can take price right back up to this previous resistance. Let's look to the left to see if we have any other rejections in that area, or if we should lower it. Yeah, we have a significant area right around that 1760 area. Move that down. Previous support over here as well. So I can see if you get that close above that area right here, price could very well be coming back up to that area with a nice clean close above, right? Looking at the 1 hour now. 1 hour, again, since tapping into 1680, we've been creating higher lows. We kind of ranged over here, created a new higher low, new highs over here for the past couple of weeks. We tapped that area and ended up rejecting, but we held the support multiple times over here, kept rejecting this area, and then we bounced up yesterday, right? So ended up reaching that 1748, 1750 area, and now we're starting to reject. Are we going to hold support here to continue up, or are we going to get a nice clean close below this area? And we could very well be, taking this move down if that's the case. It really depends on what data comes out today. If not, we may not even get that much of a move, but we shall see. Looking over here, the reason why I was saying the move was nice is because if you look at the 30-minute, after holding this resistance, previous resistance over here, another indecision candle, we passed below that candle, continued down. But looking at the 15-minute, look at this setup right here. You end up holding this resistance right here. Strong bearish close on the 15-minute. Top wick formed, passed below that candle, and then we're kind of mirroring this move back down into this support right here. Sharma, you have anything to add?
No, just waiting for those clean moves. I think for gold, it's already starting to happen. So now you just have to trade the reaction to the news. There's a little no trade range that I do have here right above the zone that you've marked off. So I want to see how price reacts into these areas down here. This is my entire no trade range. Given how price has consolidated out here, we saw a little bit of low volume and then finally it pushed out. We came back, held on to support here a couple of times, and then finally saw the same momentum. So I want to see if price will do the same exact thing. Come here, maybe tap into these areas and then push right back up.
Absolutely.
Based off of higher time frames, I am expecting that bullish push because we did bounce off of that 1680 level off the daily time frame, I think back on the 21st. And now it's just creating those higher highs and higher lows.
Absolutely.
And also in his, as you're like moving on to a different time frame, but also Powell in his speech yesterday did mention that he was expecting to do another aggressive hike, but the main goal here for the Fed is again to control the inflation and whatever they need to do to control the inflation.
Yes. Let me go back to GJ real quick. I'll actually kind of split the screen here for you. All right, so looking at GJ, what I'm expecting is us getting that 30-minute close. Hopefully we get it above or below this support over here where you could take that top wick. We passed below the previous, and then we got 60 pips to play with here. If it closes like this, I have seen price drop anyway as long as we create a top wick. But the main thing that you want to wait for is closing below the support here. It also, it's a psychological level, that 164, 200 level, right? You got that support. We bounced off that level multiple times and continued up. So we'll see what we get. But don't be surprised if we just continue this move that we have here. Same thing here. And then we just continue down from here.
Yep. I could even see like a quick fake out maybe after New York Stock Exchange opens up, but quick little fake out to come back and tap into the 164, 600 area. And then continue pushing down from there.
Absolutely. We were able to finish that breakdown at perfect time.
Yeah.
Not much rust we had to shake off, huh?
Nope. I mean, for the most part, this is the week. Chris and I were talking before you hopped onto the Zoom. It's the week that a lot of traders wait for. It's the traders' dream week. You got interest rates, you got GDP, you got PCE price index coming out.
Mm-hmm. That's why I was telling everyone to just stay patient Monday and Tuesday. Like, relax a little bit. Obviously, we took 3 trades, but they were ideal setups, right? You're not like trying to force anything. These are ideal setups that you look for on a daily basis, waiting for the volume push, and going about it that way. But other than that, if you're not getting that stuff, then you're taking it easy.
Yeah.
All right, 8:30 just popped around.
What I also think is going to be very interesting to see here is you got the GDP, but you also have the job or the unemployment claims coming out.
Job data.
Yeah, that's starting to increase. Clearly, that tells you something, right? And then let's see if GDP is going to come out negative as well. GDP did come out negative. I'm on financial juice.
We got exactly what we wanted on GJ over here.
A push down?
Oh, yeah. Top wick.
I just got the same thing on US 30 as well.
Awesome. So I am in GJ now.
Perfect.
What came out here? Did we get a contraction? Wow.
Yeah.
Officially in a recession, guys. But don't ask the White House.
That's just a definition. That's the funniest thing I've ever seen in my life.
I know. You know, what is that?
Oh my
It's just
god.
gaslighting.
Alright.
All right.
So just a quick little summary. So we weren't able to do the weekly outlook this week, but we're going to continue doing that next week, and then from there on out. And then also, we're doing the live session today, but we're going to do one tomorrow as well for price index. But a quick little summary on the fundamentals, like a quick catch up so far. So again, we've seen the markets for the most part already price in Russia, Ukraine. That's kind of becoming old news when it just comes to the markets, unless there's any other new advancements, but the market really wouldn't be reacting anymore to that. Also now the bigger concern is, again, interest rates and inflation. But also, a lot of the countries now starting to move into, it's not just the U.S., but a lot of other countries, especially in Europe, starting to move into this recession, right? And what does that essentially mean? And what kind of, how bad is the recession that we're looking at? So we are starting to get the data points. We're already starting to see how major companies, when you look at on a little bit more granular level, you can see major companies are slowing down their hiring process. Major companies are also firing a lot of people, so there's a lot of layoffs going on. So keeping that in mind on top of, the weekly unemployment claims that we see, plus you got the negative GDP coming out, which is, again, now you're officially in a recession. So taking all of that into account, how bad are we in this for, right? The last time we had a recession, and there was a lot of money injection and everything that the market had to correct, that the economy had to correct, so to speak, we didn't recover from that for years. And so we've had a major, again, liquidity injection into the economy already back in 2020, which we are seeing a lot of that being, corrected now through decreasing the money supply, and then also moving towards this contractionary policies, increasing interest rates, aggressive hikes when it comes to interest rates. And then also when you look at consumer behavior, that's starting to slow down, and we're starting to see the consumer confidence starting to drop. So now you have to look at what are the different options that the Fed's eventually going to come out with. Can we see, in the next couple of months, or by the end of the year or early next year, starting to see a slowdown in interest rate hikes, or maybe even cutting back interest rates again? Because that is going to be required. At one point when you're in a recession, you have to cut back on the interest rates to kind of make, again, taking loans, borrowing, lending, all of that a bit more attractive for the consumers, and obviously a bit more affordable for the consumers, and bring in more consumer confidence, so then you can start to see the economic growth.
Absolutely. You know what's weird? I have my. Let's take a look. I have the top wick on my MetaTrader here.
Mm-hmm.
See that? I have the top wick on the MetaTrader, and we passed the low. That was my entry. A little late because of the spread.
Yeah.
But if you take a look at
There's no top wick there, yeah.
yeah, so it looks like a bad trade on my part. But you guys see my entry right around here. I have 2 entries. And again, with that data coming out, you should see further strength on the Japanese yen over here, right? Just pushing up. You're playing your setup right here, and you're just riding this thing down. And we should be coming down to that 600 level.
Absolutely. Make sure that while you're taking advantage of volume here, that you're still securing some of your trades, right? Just because there's a lot of volume, don't just leave your trade running without securing anything, without managing your trade. If you do the normal 10 pips, go for your 10 pips, secure something, and then either decrease your stop loss, move to break even, trail your stop loss, whatever you feel comfortable with, but also, try to let runners go if you see the potential in your trade. And that's really going to help your trade or your account grow.
Very easy to get greedy during news.
Absolutely.
Don't let emotions take over. Anybody have any questions? You guys all good? How are we doing on YouTube?
What is GDP inflation? I think I pretty much just explained that, right? I think that's the only question that we have. Alright, real quick, do you want to hop over to Forex Factory and then we can kind of talk about, everything else that's coming out?
Yeah, absolutely. So,
Perfect.
again, as we were just saying, we're officially now in a contraction with 2 consecutive quarters being in a contraction. So, again, I was just saying we're in a recession right now, and I don't think it's too hard to tell that we're in a recession right now. I don't think the economy is where we want it to be. Again, like we said, the Fed and the White House and politicians will tell you otherwise because they have special interests. But we know very well the definition of a recession is 2 contracting quarters, and I wouldn't be surprised if we have a third too. So unemployment data, really basically came in at what they were expecting over here, a little bit higher than the previous. We have Yellen that's going to be speaking today as well, so we'll see what she's going to be lying about. Moving into later in the Asian session, you have unemployment data coming out of Japanese yen, retail sales, a lot of stuff coming out of the Japanese yen. But either way, you're going to have a strong Japanese yen with the U.S. data coming out right now. So you get some fear in the market. Moving into Friday, we have a lot of GDP data coming out, CPI, a lot of stuff coming out of Europe. You move into mortgage approvals and real estate data coming out of Great Britain. Moving into 5 a.m. Eastern Standard Time, you get CPI coming out of Europe. Europe, as we know, is not doing too well with their economy either, especially Germany and France and Italy. Their prime minister just stepped down about a week ago. A lot of things going on. The biggest thing, Ukraine and Russia and their gas. I think they're going to be tightening the amount of gas that they import right now. So that's not going to be too good for anyone in Europe. But moving into 8:30 a.m. during the New York session, you got core PCE. This is the main data that the Fed looks at when it comes to inflation. So this will be another big mover in the market if anything kind of surprises us or we get a lot more than what was expected right here or previous. Later on in the morning, 10 a.m., University of Michigan consumer sentiment, and then inflation expectations as well. So again, big week when it comes to data coming out, and it really got kicked off yesterday when it comes to the Fed announcing their 75 basis point increase. We're now at 2.5%, right? So you're going to start seeing mortgage rates go up. You're going to see everything's getting getting tightened. There's somebody I like to follow and listen to his podcast, Patrick Bet-David. He does valuetainment. I don't know if you guys follow him or see his stuff, but he had a good analogy for what it's like for what the Fed is basically doing right now. Has anybody gotten, you guys don't have to, raise your hand and volunteer the information, but has anybody ever gotten a call from lenders or banks saying that they're tightening their credit limit? Right? So if that has happened to you, right, that's basically what the Fed is doing right now to the U.S., right? They're tightening the credit limit that they're affording to the U.S. public and to U.S. banks and the government and everything. They're tightening the availability of getting money. So that's going to hurt the availability of businesses to get any lending or it's going to hurt GDP for business growth or anything like that. That's basically what's happening right now.
And you would see the quick switch up in the past couple of months where the Fed was, in general, when you go to a bank, what they were trying to do now is trying to make it a lot easier for anybody to go out and get a loan. They had certain restrictions in place, and they're like, instead of, at one point, just to put in like layman terms, they were just like, screw the restrictions. If people want to take out a loan, let them take out a loan. But they knew that a lot of these people could not afford to take out a loan, right? And now, when those people, consumer behavior is always going to stay the same, regardless of whatever year that you're looking at, whatever the conditions may be, whatever you're looking at, the consumer's going to do the same thing over and over again. people like to take out loans, people like to go buy things that they cannot afford. Not everybody has, great financial literacy in that sense. And a lot of people did the same exact thing. They went out and they took out loans that they knew that they could not afford. And now when you start to see this tightening happen, and a lot of the times when you go out and you're taking loans, look at, what are you looking at a fixed interest rate, or are you looking at a variable interest rate? And also look at the huge range of the variable interest rates too. A lot of these loans that were taken out by consumers, they were taken out on variable interest rates. So that means as the interest rate starts to increase, and they're increasing it aggressively, as we can see, a lot of these consumers are going to get hurt. A lot of these people are going to start defaulting, and it's already starting to happen. If there's a website that you guys want to go check out, it's the Fred website for mortgage or loan delinquencies. Go check that out, and you'll start to see on a quarterly level how that's starting to play out. It flattened out a little bit, starts to increase again. But again, we are headed in for a lot of defaults in general. Not just mortgages, but a lot of the consumer loans in general.
Sharma, you want to send that link to the YouTube channel?
Yeah.
Anybody have any questions? Oh, nice job, Borga. Same trade that I just took. And it was based on your own analysis. Like, we both took this at the same time. So great job on this. Just playing the trend here. Borga, is that like your actual name? Do you have a different name? Is that just your Zoom name? Oh, awesome.
So I just sent the first link that's updated by Q1. So Q2 data is going to be coming out in just a couple of days. Check that out. And then here's another link where you can go check out, mortgages, any specific loans that you really care about. Single family residential homes, we know that a lot of people are buying up homes in 2020, in the last 2 years. So how that's going to play out. Credit card loans, all loans in general, consumer loans, business loans, the entire website's there.
Beautiful.
Alright, so again, I hope you guys are still securing something on your trades here, and let runners go if you see the potential in your trades. But make sure that before you end off the session that you have managed your trade somehow. Reduce your stop loss, move to break even, trade or stop loss. If your TP has been hit, congratulations. But other than that, I think this is pretty much it. We just discussed what to pretty much expect for the rest of the session. I do expect a lot more volume to kick in after New York Stock Exchange has opened up, about an hour or so into New York Stock Exchange open. And then I'm expecting a lot more volume tomorrow as well.
I was actually looking at this, KB. You get the high created, get this bearish candle close, very small bottom wick on this candle, but you waited for this candle to close on the 1 minute, right? And then you can anticipate with the news price just continuing up from here. So that's a good job executing on the 1 minute if that's what you do.
I looked at the confirmation on the 5 minute as well, and then took the entry on the 1 minute.
Yeah, I was. If you saw me before, I was looking at the 5 minute as well. The 1 minute.
Yeah.
Yeah, that's nice execution. Get my words tied up. All right. I am securing most of my position here.
Mm-hmm. The new 4 hour comes. Well, as this current 4 hour comes to a close.
Yes, sir. 1, 5, let's say. Then I'm gonna just cancel my. So like 80% of my position is secured right now, and I'm just gonna cancel my TP. I like to just leave that runner, secure most of my position, and just let it go. Especially with the price action that we have over here to the left, and the potential for price to continue down. I want to just look at GJ real quick. If you guys take a look, we have been making these higher lows, and this trend line's a little messy. To be honest with you, like if you were to drag it from right here, it's a little bit cleaner. Right there, it's only tapped twice. Actually, let me see something. Yeah, there we go. That's a little bit better. All right, so 3 taps right there. We could be coming down into that. Again, we're in a range right here. Can we break through this support? Can we break through this support over here? I'm definitely going to be securing another percentage right down here around 163, 200. And then eventually we could very well continue down to 162 flat. All right, nice psychological level. And just leave that runner risk-free and just let it go.
Perfecto. I think it's going to continue pushing. There's really nothing stopping us.
Yep. I think, like Sharma said, it was a great little quick session. We did a quick breakdown. I think it was perfect timing too, and gave trade opportunities and trade setups and nice little breakdown for you guys for the future as well. And we'll see you guys back again tomorrow. You want to do it tomorrow?
Yeah, tomorrow, same time.
Let's do it.
All right. And as always, if you guys have any questions, always feel free to reach out to either of us.